Hey, good morning. This is Mayor Valensky with Driving Markets, driving while talking about markets. Remember, anything said in this piece is an opinion only. It's not investment advice, not financial advice. I'm not some sort of stock market guru or prophet that's going to unbelievably make you huge amounts of money. That's not going to happen. So I want to dedicate this particular video to my friend and colleague Phil. Okay, lives in Spain, Barcelona, and every time I upload a YouTube, a driving market, he's always got something to say, which is great. It's good feedback, but more often than not, it's a critical comment regarding my view on markets, how I've got it wrong, and stating some of the facts. So I want to state something which I promised him today. I'll state he sent me a message, and this is for you, Phil. The Nasdaq has had its biggest rise since 2001. It's gone up 10.7% in the month of January. That's for you, Phil. I promised I would mention it. I promised I'd state it. I promised, yes, I got it wrong. Yes, I was calling about the markets going down. I got it wrong. Yeah, I got it wrong, Phil. 100% I got it wrong. I admit it. There's no way I'm saying I'm right all the time. Remember, this YouTube video is purely an opinion only, and I'm no market expert like yourself or like many other people. I'm sure there's people that are 1,000 times better than me when it comes to market reporting, market background, understanding, technical analysis, fundamentals, pushing the markets. I get it, absolutely, but it's purely a little bit of media to give a little bit of opinion, my opinion, based on my experience and where I think the markets are going. All right, so let's kick off and let's see what was driving markets yesterday. The biggest drive in the markets yesterday was quite simple: that the analysts, the traders, the investment bankers, the prophets, all of these Wall Street gurus believe that the Fed may not increase interest rates tonight. Okay, remember I said they could increase it by 50 basis points, which is completely contrary. I admit it. Most consensus was 25 basis points, but since there's been such a drop in inflation, and since there's been such a fall in wage inflation as well, which is an indicator further of inflation, then all of the bulls and all of those top analysts believe that actually the Fed will not only not raise interest rates, but in 2023 they will reduce interest rates. Okay, that might be the case. It could well be that the Fed will stop raising interest rates, and they could lower interest rates in 2023, and Mary Poppins will become President of the United States. Anything's possible. You're absolutely right. Anything's possible. In my opinion, for lots of reasons, I don't believe they will stop raising rates. They may slow down the pace from what has gone on from the last year, but they will not stop raising rates because underlying inflation is still there. It may be the statistical measure of inflation, what they use is a basket of goods, which is not broad enough in my opinion, will bring down headline inflation because politically and economically the governments and the Fed and the central banks need to show a reducing inflation. It's not going to fall significantly enough on the headline rate in order for the central banks to start reducing interest rates. Of course, this is for Phil. Anything could happen. You're right. The central banks could drop interest rates by 1 or 2% in 2023. It could happen. Absolutely. Will that benefit the markets? No, it won't. All it will do, it'll push up inflation further, and it will cause further problems later on. So interest rates need to stay high. They might not be having the necessary impact that they want to have on inflation, but the general public need to be aware that the central banks are fighting inflation. So what's driving markets for the whole of January is the view, the hope, the anticipation that interest rates have peaked, inflation has peaked, and as a result of that, interest rates will now not go up any further and inflation will come down. Could well be, okay, as I've said previously. Right, going on to some of the numbers. General Motors had massive numbers with a very positive outlook. That pushed up the S&P and the Dow. Huge push, huge jump in General Motors, and all looking very, very, very sexy. In addition to that, you've got Tesla. Tesla reversed its drop yesterday and began to rise again. So Tesla was up yesterday. Again, a lot of volatility, and as soon as the markets go up, obviously any asset class within those marketplaces goes up, okay, including Tesla. Tesla's a high risk. Now, I'm a big fan of Elon Musk. At the moment, Tesla looks like slightly overbought. It looks like overbought. A lot of the stocks look overbought, and I say, again, in my opinion, Phil, that the market looks overbought. It looks like it's gone up too much, too fast. That's my opinion, and we're looking for a sell-off. Now, I can't get the timing right. No one can get the timing right, okay? Especially me. You can't get the timing right. Everything's to do with timing. Fine, fair enough. But you can't always get the timing right when it comes to trading. If I ask any trader, there's no such thing as making profits every day, every week, every month. Even Warren Buffett doesn't make profits every day, every week, every month, and has lots of losing shares and lots of losing investments. Okay, so my view is going forward, there will be a correction. There will be a major correction going forward, and we can see all of the NASDAQ stocks and the high-risk stocks coming off dramatically. That's my opinion. Yes, I'm sure I'm going to get feedback and pushback by Phil and other people. So Phil has been mentioned non-stop on driving markets. Phil in Barcelona, he is one of the market experts. He's a mate of mine, and I'm sure he's going to comment very significantly where we're at. Home sales in the States. The Case-Shiller report came out. Home sales, home prices have dropped for the 5th consecutive month. Caterpillar dropped, CAT dropped significantly, by the way, and Home Depot and other building stocks also dropped on the back of the Case-Shiller housing report, and prices in the States are falling. There will be further falls in house prices in the US, in Europe, and in the UK as mortgage rates rise, or mortgage rates remain absolutely stuck and solid where they are at the moment. All right. Now, I hope everyone understood this driving markets dedicated to Phil in Barcelona. If you didn't get it, well, I hope you did. This is Mayor Valensky with Driving Markets, driving while talking about markets. And you can catch me on Instagram and TikTok. Subscribe, share. I hope you're enjoying the channel. Just be confirmed. No, I don't get everything right, and hopefully you will benefit from driving markets. Have a good day.